Let me tell you a story. It was the middle of 2020, right when the world felt like it was upside down. The markets were all over the place, tech stocks were exploding, crypto was in one of its hype cycles, and people were throwing money at meme stocks like GameStop and AMC. Everyone was chasing the next big thing. But I was looking somewhere completely different. I was looking at corn. Yeah, corn. Real, actual corn. The stuff you eat at barbecues and buy in cans. When I told my friends I was putting money into corn, they looked at me like I'd lost my mind. One of them literally said, "What's next? Lettuce futures?" I didn't argue, I just smiled, because I had done the research. What most people don't realize is that corn isn't just food. It's everywhere. It's in your breakfast cereal. It's in soda. It's in fuel, as ethanol. It's in livestock feed, plastics, even some packaging materials. It touches almost every part of our global economy. And that means when something affects corn, like a drought, a supply chain issue, or a policy shift, the price doesn't just nudge, it jumps. Back then, I noticed a few things. The US was heading into a dry summer. Crop forecasts were already being revised down. Ethanol demand was starting to pick back up post-lockdowns, and countries like China were buying up huge amounts of agricultural commodities. At the same time, the news cycle was so noisy that no one was paying attention to the crops. Everyone had their eyes glued to Bitcoin and Tesla. So I asked myself a question. What if the real opportunity isn't in what everyone's chasing, but in what everyone's ignoring? I didn't have a commodities trading desk. I wasn't a farmer. I just wanted an easy way to invest in corn. That's when I found something called the Teucrium Corn ETF, ticker symbol corn. It tracks the price of corn futures, meaning I could invest in the direction corn prices were moving without actually trading futures contracts. It was available on most platforms: Robinhood, TD Ameritrade, Schwab, you name it. I bought in. Not a crazy amount, just a small position to start. Then I waited. A few weeks later, the USDA released a report showing lower than expected yields due to dry conditions in the Midwest. Prices started to climb. Then a major flood in Brazil damaged a huge portion of their crop. That meant more global buyers would turn to US corn to fill the gap. And suddenly, corn was up. 10%, then 15%, then 20%. I wasn't glued to charts every day. I wasn't in some high-frequency trading game. I was just reading supply reports, watching weather trends, and investing with common sense. And that's what I love about commodities like corn. They're physical, real, tangible. You can understand them by looking at weather forecasts, government reports, and global demand trends. So how can you do it? Let me break it down. First, you can start with ETFs. The corn ETF is probably the easiest entry point. It gives you exposure to corn futures without needing a commodities trading account. You can buy it like any stock. Second, for the more experienced, there are futures contracts. These are traded on the Chicago Board of Trade and give you direct access to commodity price movements. But be careful, futures are leveraged and volatile. You can lose a lot of money if you don't know what you're doing. Third, you can invest in companies tied to the corn industry. Agricultural giants like Archer Daniels Midland, ADM, Bunge Limited, BG, or Deere & Co. DE can all give you indirect exposure. These companies make money from corn processing, distribution, and farming equipment. And fourth, there are agricultural funds like the Invesco DB Agriculture Fund, DBA. They offer broader exposure to several commodities, including corn, wheat, soybeans, and more. This is a good play if you want to hedge your bets. But remember, no investment is magic. You have to understand what moves the price of corn. Weather, droughts, floods, and frost in the US, Brazil, or China can dramatically impact supply. Government reports. The USDA's monthly crop reports are gold mines of information. They tell you how much is being planted, harvested, and stored. Biofuel policies. Since corn is used in ethanol, changes in green energy mandates or oil prices can drive demand. Global demand. Countries like China, which import massive amounts of corn, can shift markets overnight with a single trade deal or embargo. So how do you stay on top of it all? Personally, I use a few free tools. The USDA website for monthly crop reports, trading economics for historical and real-time commodity prices, weather services like AccuWeather's agriculture reports for forecasts in key growing regions, and good old Google alerts for corn supply, ethanol policy, and USDA crop yield. You don't need to be a Wall Street analyst. You just need curiosity and a little patience. Looking back, That investment in corn taught me something valuable. The best opportunities aren't always loud. Sometimes they're quietly growing in a field somewhere in Iowa. Corn might not be flashy. It's not going viral. But it's essential, and that makes it powerful. So the next time you're looking at your portfolio and thinking, what's missing? Maybe it's time to ask yourself, do I have any corn? If you found this deep dive into corn and commodities investing helpful, make sure to hit that subscribe button. By subscribing, you won't miss out on future explorations into the markets, unique investing angles, practical tips to grow your financial knowledge. Join our community, stay curious, and let's navigate the world of investing together, one surprising story at a time.